The Sandbox metaverse starts showing signs of recovery. The reasons: Bitcoin's boost and its new partnerships. In the weekly graph, we can see between January 17th and 23rd a fall shown within a downward engulfing candlestick reaching $2.56. The following week, the price returned to the $2.5 to $2.6 zone. Last week, however, we can see that the green candlestick's body skyrocketed. If we look at the moving averages, we can see that Sandbox attempted to lose the 20-period moving average in a weekly time frame. In fact, it almost closed below it. However, the following week, it closes above the average, while this last week, it completely overtakes it and closes above the previous weekly candlestick. We can see from its highest point over the last few weeks, Sandbox has suffered a fall of roughly 70%. And over the last couple of weeks, it has recovered 83% from the lowest price. In this daily timeframe graph, we can see that the price touched this incredibly important support located between $2.5 and $3. It attempted to break the support on 2 occasions, with several candlesticks which represent a clear rejection. It seems like the price is looking to touch the higher part of the downward trend line, which is shown in white. We must also keep in mind that the downward movement which took place around the 20th of January broke the important support zone of $4.5, which even broke Fibonacci 0.61 to later recover. We'll now move on to the Relative Strength Index, or RSI, where we can see that it reached an oversold zone of 25.38 points, to then spike up and end up at roughly 60 points. What clue does this give us? That the market strength has been in convergence with the price in an upward movement. And now we'll need to see whether the movement is able to break the downward trend line and touch the resistance of $5.34, which coincides with Fibonacci 0.38, or instead carry out a pullback and touch the previous breakpoint located at $4.35. As we can see in the mid-Jan zone, the price almost touches the 200-period moving average marked in grey. At that point, it bounced back and the price moved into a consolidation zone at roughly the 20-period moving average marked in red. And on the 4th of February, the upward movement is confirmed, which looks to test the 50 and 100-period moving average marked in purple and yellow. These averages, if we look closely, are about to cross each other. What could this indicate? When the average of a downward lower period crosses a higher period average, as in this case is about to occur, it is a bearish sign. But as we can see, the price is about to break both averages, and therefore this crossing could not happen. If we see candlesticks closing above those averages and crossing the downward trend line, we could see a continuation in the upward movement. And we can't forget that this movement is largely caused by Bitcoin, which experienced a strong spike, leading it to $42,000. A movement which, as we saw on Nebolus.com, liquidated many short positions. In addition, something that has also influenced Sandbox recovery has been the news around its metaverse selling new plots of virtual land. In fact, 550 lands and 8 estates, which has a fixed selling price in addition to some NFT premium. If we add Sandbox's ability to attract new partners and investors, we can get a better understanding of the price's spike. Amongst new partners is the eToro trading platform or the NFT collection called Apes of Space. A few days ago, Nebolus covered the creation of its new incubator. What's the aim of this? To invest $50 million in startups which would improve the metaverse's technology. In addition, Warner Music Group has partnered with Sandbox in order to create new experiences related to music, such as concerts in the metaverse. In short, Bitcoin's upward movement has led to Sandbox's rise. However, its ecosystem growth has also caused its upward price movement.